Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are fractionally higher this morning as traders digest earnings from tech giants Meta and Microsoft, as well as the Fed's decision to keep interest rates unchanged. The S&P 500 is in record territory after surpassing a level of 7,000 for the first time ever yesterday. And it's a big day here at the NYSE. That's because York Space Systems is going public. The space and defense company priced its shares at $34 a piece, giving it a post-deal market cap of $4.3 billion. York's executive team is on site to ring the opening bell today, with its CEO, Dirk Wallinger, doing the honors. Here's what else is on tap this hour. We're going to give you a front row seat to York's bell ringing at 9:30 Eastern. Following the price discovery process that will take place early in today's session, the firm will officially begin trading on the NYSE under the ticker symbol YSS. Meanwhile, investors are paying close attention to a slew of big tech earnings, including from three Mag 7 companies yesterday afternoon. An analyst tells us what he's taking away from the reports and what it could mean for the sector as a whole. Plus, the third edition of NYSE Space Summit will take place next month, bringing together leaders, pioneers, executives, and industry partners. And we're going to show you the stories they're monitoring most closely. But we begin with the markets, as we always do here on NYSE Live. Investors are digesting the latest Fed decision, big tech earnings, and a dose of history as the S&P 500 touched 7,000 yesterday for the first time. Joining me now is Michael Ranking. He is the senior market strategist at the New York Stock Exchange. Michael, welcome.
Hi, Ashley. Good morning. Thanks for having me.
Of course. So glad to have you here. So we're about 30 minutes away from the start of today's session. Of course, the markets, S&P touched 7,000 yesterday. What are you going to be looking at most closely today?
Yeah, so it's one of those days where it just, there's so much going on. There's so many earnings reports. The macro environment is, very busy. It just feels like you're just drinking through, kind of a fire hose. Yesterday we had the Fed decision. As you pointed out, that was kind of a non-event. And then we had, kind of a wave of tech earnings, and markets are kind of really digesting that. And then we've also had just, kind of a ton of, kind of industrial earnings this morning, and you're seeing kind of a very mixed response. As you highlighted yesterday, the S&P 500 tagged that kind of big round number, 7,000. We did pull back. With where futures are, we're going to kind of test that again as markets open up this morning.
You mentioned big tech earnings. We heard from Meta, Microsoft, and Tesla yesterday. What were your biggest takeaways?
Yeah, well, the biggest takeaway is that everybody continues to spend on AI, right? So we saw kind of the CapEx numbers coming in well ahead of expectations. And you're seeing kind of a very mixed response, kind of within the marketplace, where Microsoft is trading off, kind of on the, kind of on their Azure, their cloud business numbers, which were pretty much in line, but, kind of a little bit of a disappointment, I guess, to the street. Whereas Meta, even though their CapEx numbers were kind of very high, kind of came in ahead of expectations, right? They've shown an ability to monetize that a little bit more. And so, kind of they're being rewarded, right? So there's this kind of, kind of focus on the spending and companies that are able to monetize that. Kind of within software, right? We've seen kind of a pretty mixed response as well. You have IBM moving, higher on, kind of very strong numbers. We have SAP, ServiceNow trading off, right? And that's one of those areas of the market that, kind of, people have been focused on, kind of on the idea that kind of AI is going to kind of really kind of derail, kind of that SaaS market, right? And so, we're seeing kind of a pretty mixed response. But the takeaway is that AI spending is continuing, right? That feeds through to other areas of the market, right? And if you look through at Caterpillar this morning, right? Caterpillar was the best performing, shockingly, the best performing stock in the Dow Jones Industrial Average last year. They had very, very strong numbers, right? And that's also, you don't think of Caterpillar as an AI play, right? But with the data center spending that's happening, the power and generation business, that they support, and now they're going to actually get the tailwinds from all the mining and just kind of the surge that we've seen in precious metals and metal in the metals complex over the last year. That company is kind of clicking on all cylinders.
All right, and we also heard from the Fed yesterday.
Yes.
Some saying an uneventful meeting.
Yes.
What was your takeaway? Those rates, of course, remain unchanged as expected.
Yeah. So look, I mean, market expectations for when the Federal Reserve would move next have been shifting out as as we have seen the economic environment kind of improving. We're coming out of the government shutdown, so we need to see kind of some of that economic data kind of normalize, right? And we're still seeing kind of a pretty resilient labor market. So a couple months ago, markets were looking for another rate cut in the first quarter. Now that's kind of shifted out, kind of to the middle of this year. Now, there wasn't a whole lot of drama in terms of monetary policy coming into yesterday's meeting, but with kind of the DOJ investigation of Chair Powell, the Supreme Court hearing with Lisa Cook, and kind of just this idea of Fed independence, that is where all the drama has been kind of focused on. And during the press conference, kind of Chair Powell showed us that he was a Disney, kind of a Disney fan, adding to that, kind of, we don't talk about Bruno from Encanto, saying we don't talk about other officials' commentary, we don't talk about the currency, we don't talk about court hearings. So, he kind of took the high road as we would have expected.
All right, and you said, that meeting and his remarks, of course, generating less buzz than in Fed meetings in the past. So, yes. And anything else you're looking at in the market right now? Any other trends?
Yeah, so I mean, I think one of the things you have to pay attention to is what's happening in kind of the metals complex. That's kind of just a very, very it's turned into this kind of really momentum-driven trade, right? And you've seen kind of with the U.S. dollar weakness, we've seen gold moving higher, but now it's starting to bleed into other metals that are having kind of more of an industrial use case, where you've seen kind of silver surging to start the year, right? And then just overnight, we've got copper prices that are up kind of over 10%, right? So that is something to kind of pay attention to. It seems like it's kind of really just kind of turned into this momentum trade. You're now starting to see kind of oil prices move higher on kind of the increased geopolitical risk. So there's been this focus within the market kind of on hard assets away from kind of more paper assets, things like crypto at the moment.
All right, and today York Space Systems is IPOing here at the New York Stock Exchange. What is your take on the current IPO environment? Yeah,
I mean, a very exciting IPO, right? Kind of the crossover of kind of space, satellites, kind of their involvement in kind of the big Golden Dome, right? And kind of some of that defense spending, right? So that is, kind of really exciting morning here. In terms of the IPO market, right? I mean, you could see last night they priced at the upper end of the range. They increased the size of the deal, right? That we've seen that a couple times. So the overarching environment, kind of for the IPOs is pretty solid. Kind of friend of the New York Stock Exchange, John Gray, president of Blackstone, kind of they just reported this morning, had very strong numbers. Kind of big private equity company. Kind of he said that this morning that he thinks that the IPO market has kind of hit escape velocity, right? And so they are kind of looking to start to bring a lot of their portfolio companies to market. So it seems like there is a lot of demand here, and it should be an exciting year.
Do you think we're going to see more IPOs as the year unfolds?
Yeah, yes, I do. I think there's a lot of I think there's a backlog of a lot of those kind of private equity companies that are looking to come to market, right? But then we also have kind of a lot of these kind of AI, space, right? There's a lot of these other kind of thematic kind of companies that have been waiting for the market to improve. I think we're kind of there. We have kind of the investor appetite. We have the retail investor is very involved in the marketplace. Kind of given just kind of some of the structural changes, I don't think that's going away, right? So it is and if we can kind of just keep kind of the volatility kind of contained to some extent, right? You'll continue to see that happen.
And of course, as we open this segment, we talked about the S&P hitting 7,000. Do you think we're going to stay in that territory? Do you think it's only up from here?
Look, I mean, I think there's always volatility, right? If you kind of look back, you typically see kind of a 5-10% pullback, right? But what's really, really been interesting is that if you look at, the S&P 500 is kind of sideways, really, right? We've like sideways to slightly higher over, kind of since the Halloween timeframe. But over that time frame, you've seen very, very significant pullbacks in the mega cap tech names, right? So the NYSE FANG Plus index is down over 5% over that time period, right? So just given the makeup of the index, it's hard to move higher without those companies kind of taking that leadership role, right? But with that pullback, you've seen the market continue to hold up, which points to this broadening and kind of the expansion of breadth within the marketplace. It's pretty positive. You're seeing kind of small and mid cap indices kind of hitting new all-time highs. The real key factor for that into the remainder of this year is companies being able to put up kind of positive earnings and continuing to just kind of operate and show that operating leverage that they've put in place over the last couple of years, kind of focusing on cost mitigations and things of that nature. Should we see the economy start to accelerate, right, that will kind of help things move higher.
Great. Michael Ranking, Senior Market Strategist at the New York Stock Exchange. Thank you so much for joining us.
Thanks for having me.
Coming up, we're going to dive deeper into the space sector ahead of York Space Systems opening bell. Stay tuned.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. York's IPO is just one example on the New York Stock Exchange focus on the space industry. The third edition of NYSE's Space Summit is set to take place on February 23rd, bringing together leading pioneers, executives, industry partners, and investors. Archaea Media Group, in collaboration with the NYSE, recently published the first edition of its Space and Defense Market Update, providing an overview of the key trends shaping the sector. Check it out.
Hi, everyone, and welcome to the Space and Defense Market Update. I'm Mo Islam, CEO of Archaea Media Group. We're a multi-brand news media company focused on critical technologies that are linked to national security. We have two flagship brands, Payload, which covers the space industry, and Tectonic, which covers defense innovation. We're super excited to be here today. We've joined forces with NYSE to provide you a monthly update on everything you need to know as an investor in the space and defense world. I'm joined here by Jack Kerr, Research Director at Payload. Jack, thanks so much for being with us today. I do want to start off the show talking about space. We've seen an enormously successful year for the industry. I mean, just evidenced by the public markets, like space companies, there's about 22 public space companies that are up about 175% over the last year. That's outperformed the S&P 500, the NASDAQ, Mag 7, Bitcoin, you name it. What's happening? And I mean, tell us what you think is what stands out to you the most.
Yeah, so 2025 was really a convergence of a number of different tailwinds that shored up the space story. The biggest here was the introduction of the Golden Dome missile defense architecture, which is poised to run through space. And this can be a multi-decade-long initiative requiring hundreds of billions of dollars from the Pentagon, which is a very positive sign for the space industry. The broader theme here is that there's a growing realization that space-based capabilities, that being launch, that being satellite communications, that being imaging, that being sensing, is increasingly critical to modern defense.
Right, and that's just the U.S., right? You're seeing a similar pattern play out in Europe on sovereignty. It's front and center right now, given the geopolitical issues. Like, what are we seeing in Europe?
Yeah, a ton of investment from European countries and investors into European space businesses. We saw at the beginning of the year with the introduction of Golden Dome, but we saw a bunch of skirmishes, a lot of geopolitical tension. There was the Zelensky-Trump dust-up. There was Trump putting pressure on European leaders to increase their defense spending. And European countries have come to realize that they can't and shouldn't just rely on the US for access to space. So that means more dollars into space businesses, euros actually, into space businesses. That means more activity in space. That means funding for innovation, which is critical for that region. And I want to go back to the U.S. government, because I think it's an important topic to talk about Jared Isaacman, who is the new NASA administrator. And he comes from the commercial sector, and he's going to come in and really push a further commercialization of space. And that means, a positive demand and tailwinds for more innovation-focused, smaller businesses that we cover.
Yeah, and it's a great point. And I think Jared's appointment also has signaled sort of this end of the slow traditional procurement era in NASA and a shift towards more commercially friendly NASA. And look, we might be looking at the most commercially minded NASA administrator we've ever had. I hope I don't
offend someone.
offend someone by that comment, but I think it's created significant optimism around space and space newcomers, and especially those that are pushing innovation. I mean, Jared's been to space twice through SpaceX, and we'll talk about SpaceX, but I do want to talk a bit about SpaceX's competition. Blue Origin, Jeff Bezos, they had a massive win in 25. Tell us about that.
Yeah, so SpaceX is the most dominant player here. They have the most launches, the most satellites in space, but there was a number of companies, other companies, maybe smaller companies, new entrants that made a big splash this year. Namely, you just mentioned Blue Origin, who launched their New Glenn rocket, this really big rocket, and were able to land the booster, which was a key milestone. They did that this year. There are other companies that are actually publicly traded, some on the New York Stock Exchange, like Planet Labs and Rocket Lab and AST Space Mobile, that were able to get a nice footing this year as well.
Yeah, and it's interesting. I think 2025 was also the year where launch became really boring, right? Like SpaceX launched 165 times. That's about 3 times a week. No one talks about that anymore, right? You have your space nerds that do, but other than that, launch has become boring. So what does that tell you about how the industry is evolving right now?
Yeah. It's boring from an investor perspective, but still fun for a space nerd like us perspective. Yeah. But from that business point of view, launch is infrastructure, and the really exciting thing here is the downstream applications. Namely, and the biggest one, namely Starlink, which is SpaceX's satellite constellation that is beaming down internet from space. So that network has grown tremendously over the last couple of years. Last year, it doubled its customer base to now around 9 million users, and continues to outperform everybody's expectation about how big this market is, particularly on the consumer side. Used to just be a satellite communication, used to be more of a government and enterprise business, but now it's folks like me and you who just need internet and are connecting with Starlink.
Right, and we have to talk about the IPO. So SpaceX is going to go public potentially, maybe. We don't know for sure, but it's looking likely. They've we've seen numbers quoted, $1.5 trillion valuation. We'll find out who the book runners on that deal are going to be. It's either going to be, it sounds like the rumors are Morgan Stanley and Goldman. But what are your general thoughts about the SpaceX IPO?
Yeah, that's a big number, 1.5 trillion. This is going to be the biggest IPO ever. I mean, there's both in terms of raise and also in terms of just eyeballs on this thing. Yeah. This is like, you're combining the fascination of space with an Elon Musk company that is doing very well. So we're already seeing that play out in the market now where companies are being re-rated, publicly traded companies are being re-rated based on that $1.5 trillion valuation. Hey, if SpaceX is worth that, what is Rocket Lab, the second most prolific launcher, what should they be worth? Right. Is it 10% of SpaceX? Is it 1% of SpaceX? So the market's really trying to figure that out now. And also the interesting thing about this IPO is it took us by surprise and it kind of came out of left field. Right. And the reason for this is the impetus is not to fund Starlink. Right. It's for a new concept, data centers in space. It's all about data centers. Right. Everything is data centers. So SpaceX is clearly very excited about this. They want to raise maybe around $30 billion to fund that, maybe fund some other things, but that is something to keep an eye out for as kind of.
Coming up, as C-suite leaders navigate everything from Fed policy to new economic developments, one firm is coaching executives and drawing up winning game plans for 2026. We're going to have that story next.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Georgie Dickens is a multi-hyphenate. She's a speaker, moderator, network builder, author, and a C-suite confidant. She's also the managing director and co-founder of Kajitan Group, which specializes in C-suite coaching. Georgie, welcome.
Thank you so much for having me.
So you've been coaching C-suite executives for nearly a decade. You say it could be lonely at the top, and some of them do face isolation and loneliness. Can you talk more about that?
Yeah, look, I think a lot of leaders speak to feeling alone, and there's a big difference between being alone and actually feeling alone. And I think the role can be very isolating. There are a few people that already get it, that understand the responsibility that comes with the seat. And so I think for many leaders, the importance really is about having that inner circle, that trusted tribe, a place where you can be vulnerable and take the corporate mask off to have the conversations you don't get to elsewhere. Because the pressure, the intensity, the scrutiny, the judgment that comes with the seat is more so than it's ever been before. So loneliness is definitely a common theme that I see in the coaching.
Why you're saying that, they're maybe more visible than they've ever been before. Why do you think that is?
Social media, you speak in a town hall, everything can be recorded, everything can be cascaded out very quickly. You don't get the chance to have an off day. And I think for leaders now, there's a real asymmetric exchange. I think leaders are expected to give grace, be okay or tolerant of people making mistakes, but the same thing isn't afforded of leaders. We do very much live in a cancel culture, and I think for leaders, they're expected to have a voice on everything, whether it's climate change, geopolitical, macroeconomic. They're expected to have a voice on everything, but you can't be too loud, yet you can't be too quiet. So they walk this very tightrope of getting the message on point or right, knowing that stakeholders are open, available 24/7, and you will be judged. Your words may get misrepresented, and I think that is a reality of being a leader in today's world.
When coaching leaders, how do you work with them? What does that process look like?
It's that trusted container, and I think for me it is, as a leader, there are very few places that you actually get to take that corporate mask off. And I think for leaders, a lot of the coaching work is, yes, it's about their organization, how they're strategizing, and it's creating that space for them to step out of the chaos and the busyness of their world into that calm container. And for me, being able to build that relationship, to be the mirror, to be the truth teller, to be the sounding board, to be the checks and balance. I think there are very few spaces. You look at any leader's calendar today, they're scheduled a year in advance. So being able to block out time periodically, which is purposefully self-reflective, it's purposefully a space for them to connect the dots, I think is really important.
How important do you think it is for them to have that space and that container? And also, do leaders just let their guard down with you and get vulnerable? And how is that analogous to their success in coaching with you?
Yeah, I mean, vulnerability is key. If you don't have a vulnerability hangover at some point through coaching, then you're not going deep enough. So I think vulnerability, if you're a leader, I think people can look at leaders and they see they can be somewhat of an avatar. And yet they may have aging parents, they may have a family member that's unwell, they may have children who are suffering from anxiety or troubles at school. So they're not immune to any of those, and yet they're expected to show up confident, composed, and there's days where they'll move mountains and there's days where they wobble. But when they have that stuff that's going on outside of work, it is about being able to create the space to kind of work through that. And equally, as I said, how do I support them so they stay fit for purpose for the role? The role requires them to be mentally and physically fit, resilient. And if you think of any organization that have operational resilience strategies, leaders today need to have a certain level of resilience to be able to deal with the demands, the intensity that comes with the seat they sit in.
We have about 30 seconds left. How can leaders set themselves up for success in 2026?
Know their on switches. I don't see in today's world a leader having the ability to have off switches. So know your on switches. What's your fuel for the bigger picture? Family, exercise, whatever it may be, but those things are non-negotiable. Prioritize, fiercely protect them.
All right, Georgie Dickens, Managing Director and Co-founder of Cogiton Group. Thank you so much for joining us at the New York Stock Exchange.
Thank you, Ashley.
In just a moment, York Space Systems will ring the opening bell to celebrate its IPO on the New York Stock Exchange. The Denver-based space and defense company provides a range of mission-critical solutions for national security, government, and commercial customers. York says it stands out from competitors because it can deliver these solutions at scale, faster, and at lower cost. In the company's S-1 filing to the SEC, York said that it's the #1 provider to the Defense Department's proliferated warfighter space architecture, better known as PWSA, by number of spacecraft operating in orbit, by number of contracts, and by a variety of contract types as of September 2025. York adds that its capabilities allow it to capitalize on Golden Dome, which is the Trump administration's initiative to develop an integrated air and missile defense system. Last night, the company announced that it raised $629 million in its IPO, pricing shares at $34 a piece. That's the high end of the range. And this deal values York at about $4.3 billion. We have a live look there at the podium. York was founded in 2012 by today's bell ringer, CEO Dirk Wallinger, who has more than 2 decades of experience. Let's take a listen.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few?" Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. The stock market is officially open for trade, and joining me now is Danielle DiMartino Booth. She is the CEO and Chief Strategist at QI Research. Danielle, welcome.
Thank you for having me this morning.
Of course, so good to see you again. The Fed handed down their latest rate decision yesterday as expected. Rates remained unchanged. What was your takeaway from the meeting and Fed Chair Powell's remarks after?
Well, I think that it was very expected, given the Fed is in the middle of a huge political firestorm, that there was not going to be a rate cut yesterday. I was a little bit surprised at how very bullish Chair Powell sounded on the economy, and I think that that sets the stage potentially for there not to be another rate cut until he has finished his term at the end of May. I think the biggest surprise out of yesterday's meeting, though, was the dissent from Christopher Waller, which the media this morning is characterizing as a Hail Mary pass, really his only way to stay in the running to replace Jerome Powell as chair of the Fed.
You mentioned that dissent, Danielle. How significant is that split? I believe there were 2 dissents.
Well, yes, there were 2 dissents, but I think we all expected the dissent of Stephen Myron, whose term ends just at the end of this month in just a few days. So it really was Waller that was the surprise. He had made earlier comments that the Fed could have the latitude to wait, but he's also been pretty vocal in saying that he is concerned about the weakness that we've seen in the job market. Of course, we're seeing this morning fresh headlines out of Dow Chemical that they're going to be cutting 4,500 jobs, in addition to some of the larger headlines we've seen this week out of UPS, Amazon, and Home Depot.
All right. And what questions do you still have following that Fed meeting yesterday?
So the questions that I have are the fact that we're seeing real-time gauges of inflation come in. In fact, Chair Powell mentioned the fact that inflation expectations had come in appreciably, and therefore I'm wondering why Fed officials decided to put inflation back on the front burner as the primary concern if the market is telling us that it is indeed going in the opposite direction, that disinflation is the greater potential risk. Why they switched away from focusing on the labor mandate.
All right, and the S&P 500 hit 7,000 for the first time yesterday. What is your outlook for markets over the next several weeks and months, Danielle?
So I think that there's going to be a lot of churn going on this year in the markets. I expect a lot of volatility to occur. We're seeing weakness right now in the leveraged loan market. We're seeing weakness in the online kind of private credit traded stocks, and that's telling us that there's another potential credit event brewing, bringing us back to what's going to be, I think, higher volatility in credit, which is going to bleed into the stock market.
All right, and any other market trends you're following right now, perhaps something that you feel is a little bit under the radar that we might be hearing about later this year?
So I think we should be paying attention to days. You're there at the New York Stock Exchange. I think we should be paying attention to days that the Dow Jones Industrials outperforms the Nasdaq, the QQQs. That in 1999 and in 2000, those types of signals were suggesting that employees were rotating into a more defensive posture and getting out of the higher beta, higher risk technology stocks. So that's something that we've definitely been watching because we've been seeing a greater recurrence of the Dow outperforming the Nasdaq.
And given current market volatility and headwinds, how would you advise investors right now, or what advice would you have for them?
I think it really depends on your risk appetite, which sounds kind of like a cop-out, but truly, if you're concerned with record high valuations, no matter what metric you use, if you're concerned about that, then you should be hedged. And if you're a very young investor and you know you're going to be in this market for decades to come, then potentially you just put your seatbelt on and ride the volatility waves and stay in it.
All right, thank you, Danielle DiMartino Booth, CEO and Chief Strategist at QI Research.
Thank you for having me.
Coming up, a trio of Mag 7 companies reported their latest quarterly earnings yesterday after market close. An expert's going to tell us what investors should be taking away from them. That's up next.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. The Fed took center stage during yesterday's session, but it was big tech that dominated headlines after the close. Meta, Microsoft, and Tesla, three of the Mag 7 companies, reported their latest earnings, with Apple set to release their quarterly figures later today. Joining me now is Ray Wang, CEO of Constellation Research. Ray, welcome to NYSE Live.
Hey, thanks a lot. Good morning.
All right, so Meta, Microsoft, and Tesla all reported after market close. What stood out to you the most from the reports?
Yeah, so both of them made huge investments in AI infrastructure, and one got punished and one got rewarded. I mean, they both did really well in terms of earnings. If you thought what happened on the Microsoft side, right? I mean, Azure numbers were amazing. The RPOs were huge. They had 110% in performance obligations, and yet, their forecasts were a little bit lighter, and the market punished them. What you saw on the Meta side is 24% up year over year in terms of their ad revenue, and they decided to say, we're going to spend 135 billion on infrastructure, and the market rewarded them. So it's been a tale of two cities here in terms of AI investments and AI path forward.
All right, and what jumped out to you the most from Mark Zuckerberg, Satya Nadella, and Elon Musk's earnings calls, Ray?
I think it was really interesting because AI is still top of mind for every one of them. The most important piece is really the level of AI investments that's going into each company going forward. And what you saw on the Satya side was really, you saw the OpenAI relationships, you saw the Anthropic relationships and the partnerships on the enterprise side playing a big role. On the Meta side, you can see the level of talent, the level of AI is being applied internally to save costs. Meta is one of the most efficiently run companies in Silicon Valley. Everything's almost automated, like back office functions are automated. They're using AI internally, not just on the ad tech, not just on the back office, but in every part of their business. And then, of course, speaking about Tesla, you're seeing, the optimism as to what's next, right? Is it more than a car company? That's always been the question. The answer has always been yes. And the robots are coming, and the robotaxis are coming.
All right, and what do you think that says for AI as a whole as we move into 2026?
So we're in different innings of AI. Right now, we all know the infrastructure plays. Those are big data center deals. They're really large commercial real estate transactions when we think about that. Then we got to the second inning, which is really the companies that are in the LLMs, the OpenAIs, the Anthropics, the Gemini for Google, the companies that are actually building out that piece. But we have a third piece that's about to enter, and that's the part that's undervalued in the market. You have the ServiceNows, you have the Salesforces that are moving into the agentic AI world, and those stocks are massively undervalued despite their performance. You take a ServiceNow and you're seeing like 50 plus gain, and that's amazing. So, I mean, there are Rule 50s in place, yet they're being punished in the marketplace.
All right, and you say the Mag 7 remains solid, but they're lagging the S&P 500. Can you elaborate?
Yeah, I mean, you're totally right there. I mean, it's 8.9% return versus 15.8 in the S&P 500. And that basically means the market broadened out. And of course, people started pulling back from the Mag 7. And so we're starting to see bifurcation of the Mag 7 for the companies that are using AI and using it well, and the companies that are spending a lot in AI, and people are wondering if they're going to get a return on investment.
All right, and Apple's earnings are on deck and will come out today after the market close. What do you think investors will be listening for there?
It's going to be, do you have an AI strategy? How are iPhone sales doing? Those are, of course, the big pieces, but we've seen amazing numbers for iPhone 17. And of course, the services revenues are still doing tremendous. And I think that's really the point. They're going to probably get about 10.4% year over year earnings growth on the iPhone 17. And I don't know, Street's expecting 137.5 billion. I think they're going to beat that. And we're seeing a maturing of the market. But the question is this longer a growth start or is it a mature stock? So, and we'll see. We can see if they actually get the foldable phones in place. And of course, what actually happens in their AI strategy going forward now that they've got a Google Gemini relationship.
And Alphabet and Amazon are going to report next week. And how are this week's Mag 7 results setting the tone for them?
Well, when we look at the ad revenues, right, on Facebook and Meta, right, at 24% year over year growth, the question is, can Amazon keep up? Can Alphabet keep up? Is it going to be at the same level? That is an important question, because what we're seeing is if you can make your numbers and you're still going to make investments in AI, the street's not going to punish you as much. And that's really what all investors are wondering: is this run going to continue? On the Google side, we're looking to see if they're going to continue 30 to 39% growth in terms of like high 30s. Low 40s in terms of their cloud growth, because they've got to catch up to Microsoft and AWS. And then, of course, we're always looking at the YouTube ad numbers and the growth there. On the Amazon side, how did we do during the holiday season? That's the big question. So is the retail numbers still good? And of course, AWS growth is powering the rest of that organization. So are they still keeping up pace and keeping a good distance between them and Microsoft Azure Cloud?
And Ray, which narrative do you think is likely to dominate this earnings season?
What am I choosing from? What do I get to choose from? So is it the Mag 7 are going to continue, AI story continues, or are we going to see a bifurcation of the market? I think it's probably going to be the bifurcation of the market. The companies that are actually showing AI gains are going to be there. We see companies that are doing some amazing things. We believe a 100-person company could take out some of the major SaaS players. We believe a 1,000-person company could take out major services companies. There's massive revenue per employees that are happening. These are what we call AI first and AI exponential companies, and they all follow the thing we coined Ray's Law, which is AI intelligence is doubling every 7 months, and this is really what's driving the market growth.
All right, thank you, Ray Wang, CEO of Constellation Research.
Hey, thanks a lot. Have a great day.
Earlier this month, I was on the ground in Orlando, Florida for the 28th annual ICR conference, which has been described as the, quote, Super Bowl of consumer conferences. This year's event had a new look. ICR, which spearheads the event, appointed Anton Nicholas as CEO roughly a week before the conference got underway. Here's what he told me about how companies he works with are shifting more toward storytelling to drive the business.
Well, it's really important for us and obviously our advisory business, because how you shape that story, how you tell that story to your various audiences. I always tell people that I joined this business when we still used to use a fax to send out press releases. Most of the kids that work for me don't even know what a fax is, right? And today the integrated audience is such that when you get on an earnings call for a company, you could have competition on there, you could have your employees on there. It's not just the investment community anymore. And so the integrated storytelling is paramount. It's also about how you get above the noise and how you define your story and differentiate it. And I think that's, really critical in today's market.
And what is your outlook for investors in the public markets in 2026, especially in the consumer space?
Well, there's been what I would say a low level of activity, almost none, as you know, for the capital markets, in particular IPOs and things like that, over the last couple of years in the consumer space. So I think we're expecting that to turn this year and see more activity there. The importance of that is it's really sort of defines, I think, what investors in the consumer space are looking for, which is growth. Growth is paramount, and it's hard to find it right now. We have seen a number of companies, our clients, pre-announce really good numbers. So the consumer, and particularly on the high-end luxury side, is holding up. And obviously, consumer businesses depend on the consumer. Is holding up. The numbers that we're seeing coming out of holiday seem quite strong. So I think you're going to see investors stay disciplined, but reward growth and long-term sustainable, predictable growth.
And how have you seen AI impact the consumer space over the past year or so?
So it's interesting because we're all thinking about it all the time as it relates to our own businesses. There is a bit of a disconnect from the investment community and consumer companies because if you tell the right story around AI, you're certainly being rewarded for that. But the reality is for most companies who are constantly thinking about it, they're using AI certainly in the first instance for operational efficiency, right? How do you get operational leverage? Workflow efficiency is critical for companies, especially in consumer world where your margins are pretty thin. Your ability to use AI to drive more profitable operations is essential. That said, I think there's a lot of noise around how AI can change perhaps the front end of businesses, and I think people are still trying to figure that out. We're definitely seeing it as it relates to targeting consumers and customers to make sure that you're delivering your message and your product to the right people. And I think AI is helping do that, but I think there's, early days of how people are applying AI, and we're still yet to see really come into action on the front end.
And how do you think these consumer companies can differentiate themselves in this market space?
Yeah, well, so this comes back to the storytelling. And again, it's critical in terms of how you position yourself. And that applies across your audiences. And what I mean by that is how a company in the consumer space defines its brand, defines what it means to the consumer, and how they create that covenant of trust with their consumer base is all about how they tell that story to them. Likewise, they have to do the same with the investment community. They have to make sure that investors understand their relationship with consumers, understand the longevity of their business, that it's not just a one-hit product wonder, so to speak, which is great in the short term, but ultimately for the kinds of companies that are here, they're talking about long-term growth and how they can drive their awareness, their brand with their consumers relate to that growth.
Thanks, Anton Nicholas, for that interview. Coming up, cloud security firm Upwind just made a 9-figure move, and its CEO will share the details next.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Cloud security platform Upwind made a splash earlier this week when it announced that it secured a $250 million in a Series B funding round. The unicorn, a startup valued at more than $1 billion, says this brings its funding total to $430 million. Joining me now is Amiram Shachar, Upwind's co-founder and CEO. Welcome to the show.
Thank you for having me.
So how will you be allocating the $250 million to bolster Upwind's platform?
So this round is really allocated for massive product and engineering expansion. Just 12 months ago, we raised $100 million, and just right now we closed another $250 million. And it's really focused on product expansion. We see a huge opportunity in the cloud security market to become the next $100 billion cloud security company.
All right, and for viewers learning about Upwind, how does your company stand out across cloud security and the cybersecurity industry as a whole?
So as everybody knows, cloud is changing everyone's infrastructure, and then AI is pushing everything to the limits. And then as you introduce these new type of infrastructures and new type of applications, you need to have a new way to secure them. So Upwind was really born in that intersection of how you secure this new era of cloud, of this new era of AI, with massive demand from all the enterprises all over the world. And Upwind's coming with a unique approach of what we call the runtime-centric approach that looks at the real-time information on all the flows of applications and can understand if applications are under attack or if they have risks that they can that we can help them mitigate. And as you know, as we push towards more technology and more apps, we gotta secure them well.
And we understand that Upwind sees the Series B round as the beginning of, quote, the next wave. Can you elaborate on this?
The next wave is really meeting us in a place where the infrastructure is changing its nature. It's no longer like what we knew from what we call like on-premise days. We're in a cloud-native way. Most of the type of applications we're using are it's like ephemeral compute, serverless containers, AI applications, and we need to have the right technology to secure them. And that's how we see the next wave. And also something that is really fascinating is that in cybersecurity, it's not that common that you see like a platform being formed. We've seen that many, many years ago, I think like 15, 20 years ago, when companies like CrowdStrike really platformized what we used to have as antiviruses, and it became a market called EDR. And this is something that we see right now with cloud security. We used to have a lot of point solutions that customers and enterprises will buy to secure their cloud, but it's becoming a status quo and the right decision to buy a platform that has all these capabilities and all these different features that are securing together holistically the cloud. And we're super stoked, excited to being able to have the capital, have the product, have the team in the right moment in this market. So that's the next wave.
All right, and what do you think the next era of cloud security is going to look like?
So technology iterations take sometimes 5, sometimes tens of years in order to really completely change their nature. But we think that AI is going to push everything to the limits. We think that that's the really nice thing about cloud infrastructure, that you have no idea how it's going to look like in 5 years from now. But I truly believe that the world of cloud security is still going to look very hybrid. We're going to use hybrid in the sense of we're going to use multiple clouds. We're going to use multiple type of architectures. And we will have to have tools that can able to secure all these different architectures and all these different clouds. So I presume that it's going to be a little bit more complicated with more capabilities to deploy fast and build faster applications, especially with AI. And I think that security tooling will have to be even better than what we knew in the past.
All right, Amiram Shachar, Upwind's co-founder and CEO, thank you for joining us very early from Hawaii. That's going to do it for today's coverage. We'll see you tomorrow on NYSE Live.
The public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?